All right, welcome everybody. This is the DTS Market Letter Review Day. I do this about every 2 months, every 6 weeks to 2 months, somewhere in there. And it was originally designed for people who subscribe to the DTS Market Letter, but I also figured, hey, there's no harm in letting anybody who comes want to see it. So here is what we do. I'm going to show a letter, just to quickly run through, kind of how it works in general, why it's such a popular thing. Talk about bias, market bias, what bias plus confirmation means. Talk about the QQQ and or the SPY, which of those is better or either to use for doing market evaluation. And then we're going to take a look at the market, the bigger picture of the market since the last time I did one of these, which was December 6th. Is that right? Yeah, because we had Christmas in there and stuff. So I think it was December 6th, second week of December. And then we're going to look at, just a little bit the last intraday, what goes on and how that happens, okay? A couple of things for today. I always like to try and let you know what you're prepared for. Some key things that I do want to get across to you. Number one is that the things that I go over here, the market, the long-term bias, the mid-term bias, the intraday bias, they're all very, very able to be done fairly accurately when you understand what you're doing. I know there's a common thing out there. You can't find the tops and bottoms of the market, but we do all the time. It's a very routine thing. It is probabilities though, so it's not always 100% correct, but there are great odds in terms of what you need to be able to make money. The purpose of this meeting, how to show how incredible tech analysis is, so I was just starting to talk about, although many don't understand what it really is, how worthless news is to understand the market. I'm not going to go into that today. I've put out there a few different things about news, especially recently, to try and really get across the point that trying to understand news and fundamentals is never something that is going to be anything that's going to make you money in the market. As a matter of fact, it's actually going to hurt you very much trying to understand it. Let me just give you a couple of links here. Number one, if you want to, here is the free stuff page, where there's a bunch of free stuff, just like the name of the page says. There are recordings of stuff on there, but also in there, if you haven't looked in a little bit, I put some new educational videos in there. And there's one about the whole news thing. Oh, it's an article, down under articles, listening to or studying all the wrong things. Something I think that'd be very educational for you to read if you've not done that yet. And the videos are there from prior events, including this one. Also, I'm going to refer to in a minute the last video I did about the market, and I don't mean today. Today is a market letter review, but the last time I did a presentation just for something I call a bookmark on the market. It was number 3, and bookmark number 3 is in there under miscellaneous videos, and it's actually dated from 10/17, I guess. So I'm actually due to do one of those. All right. So there's a few things, and also the calendar. If you weren't aware of this event far enough ahead of time, I keep a calendar out there that's 3-4 months ahead of time for the most part. 2 to 3 months. And here's the calendar. Once you're on the website, you can see off to the left. There's a calendar and all the stuff you want to look at. Okay. So with that, let's take a look at a couple things here. Let's start off by looking at a typical market letter. Now, to show you this letter, you're seeing it's a long letter. It's like a 1-page PDF file to get, and it's long. So what you're seeing there, I'll kind of scroll through the whole thing. You're seeing the top part of the letter, and as I scroll down, there's the middle part. As we get down, there's the bottom part, and that's what comes every day. For those of you who get the letter, you know that. Right down to here, where the bottom part of it are watch lists. And you can't quite see this. I'm not going to change the camera, but it's a little educational section every day. So then from the bottom up, there's watch list, both kind of swing shorter term and longer term watch list. There's the econ that's coming out today, and I like to know the econ. Not that I care what it is or what's said, but just to know that there's a big number coming out, or like just now, we just had the FOMC minutes released a few minutes ago. And then there's earnings, and again, I don't care what the earnings are, but you can use them to find gaps that are occurring in the market. And as we go up, then there's the little market analysis section, and in the market analysis section, you'll see 2 charts. typically the QQQ daily chart and the QQQ 60-minute chart. And then there's a little summary of what's going on. There's what happened yesterday, the outlook for today, and then yesterday's accuracy. Now, when you get this letter, you're reading at 8 o'clock in the morning. First of all, let's talk about the QQQ and the SPY. I really don't care which one you want to look at. What you need to know is that when the QQQ and the SPY are pretty much identical, then that is exactly all you need to look at. You can look at either one, so it doesn't matter. If the QQQ and SPY are different, then it's important to understand that you are going to have problems and that there's not going to be a clear analysis no matter which one you look at. So again, it doesn't matter. For the most part, I'm here to tell you that the QQQ will usually lead for the most part, so I usually feature that. But if there's a difference, I'll note it or talk about it when that difference occurs. Okay. Sometimes there'll be a weekly chart inset if it's relevant or not. In this case, it was. This letter here is going back to where I was going to start talking about it, where the last meeting like this left off was just the beginning of December. Okay. So why do I put the market comments? What happened yesterday? Well, I put that in there because there is some educational value to understanding how to phrase what happened yesterday. In other words, if the market falls to an area, a novice looking at the chart may say, gee, we broke yesterday's low and yet somehow the market came back. Techno analysis doesn't work. Well, what you may not understand is the market held support. You may not know where the support area is. You may not understand that support doesn't mean holding to the penny. So I think the phrasing that I put there is actually part of the educational value of the letter. Okay. And then yesterday's accuracy, I take and I grading myself, of course, but grading how well the prior day's comments were. So the outlook for today is here, and then tomorrow I'll look at what was said here and say, okay, how well did that play out? Was it right on? And I'm very, frank about it. I'll put here sometimes it was terrible. It just blew it. But it's not that often. I mean, the vast majority of the time, this is either pretty accurate or very accurate. This particular day, I just happens to say home run. Shorting the 15-minute sell set that forms below 158. The italics there is what was actually quoted from yesterday. And that turned out to be the home run of the day. So it worked perfectly. Okay, so that's how the letter works in general. If you go up to the top part of the letter then, you just have, the title stuff. There's click here on how to use this letter. If you click here, you will actually get a little summary PDF file about how to use the letter, going through some different things. It discusses in there, one of the things I want to make sure everybody knows and understands is that there's 3 time frames that I think most anybody would look at the market in, 3 different time frames. And one is the long-term outlook, one is the midterm outlook, one is the intraday outlook. Okay, the long-term outlook is the big picture. We're talking about the monthly chart. We're talking about trying to avoid the crash of 2000, the crash of 2008. That's what we're talking about in the long-term outlook. If you're talking about, hey, we fell for several weeks, well, that's the midterm outlook. Several days, several weeks, whatever it is. It can extend. It depends, just how long it goes on. And then, of course, the intraday outlook goes from day to day. This changes every day. You could be in the most bullish long-term and midterm outlook and still have bearish intraday pictures because markets pull back sometimes during the day if you're up too many days in a row. So each of these is very carefully weighted and evaluated. So there's not only the ratings, and I'm going into some detail because some of you here, you get the letter, you know this. Some of you are here, you don't get the letter. I could care less if you get it or not, but I'm just giving the educational value of this. When there was a period of time that I did not put out a letter for people, I did this for myself. Okay, in other words, I think it's critically important. And it's very important to not only distinguish the time frames. I think this is where so many people get confused, is distinguishing time frames. You could be long swing trades and be bullish as crazy and yet be shorting on an intraday basis. It's very, very typical. But it's not only the bias, whether you're bullish, bearish, or whatever, but it's also the tradability. In other words, there are times where you have a bullish pattern and it's just push the button, gun ho, let's go. This is the sweet spot. This is everything. And there's also times where you're bullish because you're not bearish, but it's just an awkward time. Do you guys understand what I'm saying by that? Like an example would be is if we were up on the daily chart, up like this. Okay, are we bullish or bearish? Well, we're bullish. We're not bearish, But is this a prime time to start taking swing trades after we've been up 37 days in a row? Probably not. And that's where you'd see the tradability get down really low, even though the bullishness may be really high. Does that make sense, everybody, what I'm saying? So it's kind of the the volume, if you will. I mean, it's kind of, the gas pedal is the enforcement thing. Because you can be bullish or bearish, but just not the prime time to enter things, right? Right, it's a sweet spot, Tony, for those of you who hear me say that all the time, exactly. So all these things make a big difference to me in terms of how you interpret things. The other thing is that the purpose of one of the purposes of evaluating the market is, number one, if you trade the market, it's what you do. But number two, for me, I don't trade the market as much as I do trade stocks. And the backdrop to stocks is critical. In other words, you are going to have a hard time making money if you're going long on a day when the market's falling. Now, there are some exceptions, of course. There are things that specifically trade against the market. There are ETFs that are meant, but I mean, if you exclude the obvious, there are some things that will do their own thing from day to day, and there are some things that go against the market, like sometimes gold or oil. But just generally speaking, if you're going to go out and try and make money taking NVIDIA or Qualcomm or something long, or Bank of America, and the market's falling, you're going to have a hard time. So this really is a good indicator, one to help kind of push the pedal in terms of saying, okay, I've got a great stock, I got the marketing gear, we're moving up, we're moving down, whatever it is. So this is why I think it's very, very important to really pull everything together as a long-term trader, as a swing or core trader. A core trader just means it's kind of the next step above a swing trader. These are just friendly terms. Swing trading is typically a couple, 3 days, and that's the time frame that I have explained to you. I think is a terrible time frame to be trading or learning on. And again, on that free page, there's a video there about that you can see why it is that I feel swing trading is a very difficult time frame. But whether you're long-term, core trading, swing trading, intraday trading, everything has to really come together nice to make money. You don't have the odds where you can just run out there and just look at stuff and do whatever you want to do. So it's very important that happens. My radio keeps turning on too for absolutely no reason, which is I just killed it. Okay. So are there any questions on this stuff here? This is kind of it's some stuff about the letter, some educational stuff. It's some basic stuff. Let's get back down to the chart here and look at a couple things. Having a bias or whatever is fine, but typically the bias is never, ever phrased as today is just purely bullish, right? Or today is just purely bearish. What do we typically need to see? Does anybody know the word that I typically use for it? Today we're going to be bullish. What? We're going to be bearish. What? What's the next thing you have to have? You can have a general sense, hey, we're in a bullish environment, and yeah, I'll be bullish today if. What is it that we need to see? What's the other half of the equation, so to speak? I kind of even said half the word. Well, the conviction would be your. No, it's not. That's not what I'm talking about at all. It's not conviction. That would be kind of your tradability, if you will, Robert. That would be the tradability. Is that how great is this setup, so to speak? But yeah, it's confirmation. Or what I started to say was if. I'll be bullish today if. If what? Well, if then. If this happens, then I'll be bullish. In other words, typically we'll set up some threshold, and over or under that threshold, we will be bullish or bearish. In other words, if we went back to, if we go here on this day, it says here, intraday today, the play is to be short morning rally into 3A. So notice we'd have to rally into 3A, number one, right? In other words, all this has to set up right. It's not good enough to just say, oh yeah, I'm just bearish, because you could short at 9:30 in the morning and rally for 3 hours. And what do you want to do that for? So we need to have some threshold cross. You could call it a confirmed basis. You could call it some threshold that needs to be crossed before we begin to take action and be bullish or bearish. And again, it's really critically important. It's kind of like when some of you show up for the every other Monday night scanning session. When you guys show up for that, I talk about the fact that a watch list itself is rather worthless, because a watch list is just this pile of garbage sitting there until you activate it, until it does this. In other words, this stock here, I have it on the bullish watch list. And it may mean that I think it's going to fall until it crosses this threshold. When it crosses this threshold, then I know it's going to go higher. So it's kind of the same thing when you're dealing with a market bias. If this happens, then I would be bullish. For example, if for some reason on this day, if you're looking down here, if for some reason on this day we gapped up and cleared this area, I would be bullish. I wouldn't be bearish. So, you have to kind of figure out what's going to happen. Another thing about this letter that's important to understand, and when you do your own market bias analysis, whether it's for core trading or for intraday trading, is that, well, for intraday trading at least, I am doing this before the market opens. This goes out at 8 o'clock. So I cannot always predict every possible combination of events that could happen. So if you see on the letter here today, without reading every word of it, it's basically saying, well, if we rally up to here, this minor resistance area, I'd short the sell setup that happens in there. Okay? So that's something that could happen. I also could say, well, if we happen to go sideways past 12 o'clock, I'd also maybe short the breakdown later that day, right? But if those two things don't happen, it could be just a terribly sloppy day I don't want to participate in. Or it could be things are happening that I just can't always predict, right? I mean, during the trading day at 11 o'clock, I may decide to do something because something weird happened. But it's nothing I contemplated at 8 o'clock in the morning might have happened. So the letter can't always encompass everything that could possibly happen. It only encompasses the things that are most likely to happen, all right? So, commentary on what should happen this day, what the actual play would be if you're trading the market. And naturally, for a lot of people, it's not necessarily the play to trade the market, but it's when to get bearish. And that's what I primarily use it for. So if we, on this particular day, and this is, again, a while back, but on this particular day, if we ran up into here, I'd be waiting to short stocks until the market ran to here. And then that would give me a great advantage. If I'm looking to short stocks, and I have a list of, let's say, 20-week stocks, and I'm going to wait until the market rallies for 30 to 60 minutes, what advantage have I now gained? Anybody, what advantage have I gained? And this is kind of that double-pronged, double-edged sword I talk about where I feel I get such a big advantage doing what I do because I'm attacking it from two different sides. What's the big advantage? If you have a list of weak stocks, you want to short them, and you're saying, okay, the market's down here. I'm not going to develop a bearish bias unless the market rallies until 10 or 10:30. Then I'll develop a bearish bias if I see the market stall. What advantage does that give you? Why is that so nice when you're in that situation? What do you get to do? You're sitting there looking at your screen, 30 minutes goes by, you have this list of stocks. What do you get to see? I'm sure some of you do this on a daily basis or do this fairly routinely. What do you get to see? What's the advantage over just saying first thing in the morning, okay, gee, I'm just going to, here's my list of 20 stocks, I'll short that one. Yeah, oh, Sally, wow, you've heard me talk a lot before. You must have even taken notes. Yeah, you're right. Are you referring to my reference where you go to a casino and the dealer puts his cards up, or you get to see both your cards or whatever? Yeah. Yeah, exactly. Yeah, that's exactly right. You get to see how your 20-week stocks react when the market rallies, right? You get that little advantage, that little hint, that little look into relative strength or weakness, or just a clue into who's buying or selling. So let's say let's say the market rallies back like this, right? And your 20 stocks, you have a stock that blasts off in an uptrend. You have another stock that faked lower and then went higher, right? You see what I'm saying? All these patterns now have kind of revealed themselves to you. And now you get to say, okay, now the market's up here and look at this stock here. This stock here has just been bleeding lower the whole time the market's been rallying, right? Or this stock here popped a little bit and then fell hard and is consolidating and looks lower. So you get to see these patterns and how they have reacted to the buying that's in the market, even though you know that buying is going to be temporary because the market's going to come in and start selling. Okay? This whole topic kind of, to me, is why is this such a big deal? Why do we care about, a market bias? And you can overdo it. I mean, a lot of times, especially day trading, you do find unique things. And I've had times where following a market bias, there were individual instances where it maybe hurt me because I held off doing something, saying, oh, gee, I can't go long that stock because I think the market's going to fall, and the stock was enough on its own that it was the play of the day, and I watched it. So sometimes you may forego something, but generally it keeps you safe. You find great patterns. As a day trader, what I try and do is find great patterns that will move on their own regardless of the market, and then also try to time them with the market so I get that little double whammy thing going on. As a long-term trader, this is even more important, because as a long-term trader, you are not going to find things on their own page for weeks. Not typically, very rare. Intraday we do all the time. So you may have a big name stock, whatever, Wells Fargo was on its own page for a little bit. And you may find these stocks on their own page on a day-to-day basis when something happens to them. But you're not going to see major stocks that deviate from the market for weeks on end. So it's even more important that when you're longer-term trading, that you be very careful about making sure that you have decent market timing, or you're going to be fighting the market the whole time. All right? So with that, where are we here? So let me go back to... Next step in our process today was to take a quick review of the market since I talked last. Now, I talked last around December 8th, okay? So I don't want to repeat anything from before that. You can go onto the website on the free sub page and you can see the last market letter review day, and you can also see my bookmark on the market to get all those comments. So starting in mid-December sometime, which is right in here, we were still falling. Talked about how if we were going to maintain a kind of a trend line higher low on the weekly, this would be the area. This one turned out not to be the area, but this entire time, remember, going into this entire time, I was bearish. Starting October 2nd, I was bearish on the midterm picture. Okay, so the question was, now we're getting into this weekly area. Now right here, notice what it says. This is the prior weekly low. Now it was amazing because, of course, we broke that low 1 1/2 days. In other words, this tail this day literally hit the weekly low. This half day went through it, the next day through it, and then we fly back. Now, that's not what I call breaking support. And you have to understand the definitions in trading, or you will get messed up and you think technical analysis doesn't work. The question is, how do we react to that area? That's the question you have to ask, okay? On a weekly chart, this looks like a big move. It's an area. There's this area on the weekly chart, and the question is, when we hit this, how do we react to it? Okay. In other words, there will be a reaction. Now, if this bounce were to happen, and the next day that green bar flipped around and went red again, guess what? We would have broken the weekly area. We would have broken that support area. It would have been, something I would not have looked to find the bottom in that case. In other words, then you'd have a different approach. You would look for the daily chart to actually go back into an uptrend. Here, I'm saying I don't need the daily chart to be in an uptrend. Why? Because I have the monthly chart in an uptrend, and we're hitting a weekly support area. So I need to see some indication on the daily chart that we're going to flip around. This was a weird day. In all my years trading, investing, I have never seen this happen. This was December 26th. Are you guys all aware of that? This was the day before Christmas. This is the day after Christmas. Now, there are two problems. Number one, I typically take the week off, but I knew we were coming in to find a low that week, and I was keeping an eye on things. I wasn't doing anything, but just as a long-term investor, I wanted to find the bottom here because I knew it was going to be a big bottom. But what's the problem? That even if you were looking at it this day, which I did, I saw it at the end of that day, but what's the problem with that bar on that day? And it's a legitimate concern you have to be concerned about. What's the problem? In other words, at the end of this green bar, is that it? Are we just bullish now? We're in a downtrend on the daily chart. We're questioning this weekly support area. We get one green bar. Are we bullish? Is that all it takes to flip around October, November, 3 months of downtrending pattern? Right. Number one, it's a holiday. It's a holiday day. It's a holiday day. The volume actually was kind of average. Could it be short covering? Right, Ken? That's true. It could be short covering. And it's like I just said, going the other way. And this is the hardest thing to really teach people sometimes. It's not what happens, it's the reaction to what happens. So it's the same thing going this way now. Okay, fine, we have a green bar. How are the bulls, how are the bears going to react to the green bar? In other words, are the bears going to say this is an opportunity to sell? And when they do try to sell, how successful will they be? When I teach this stuff, I use examples, metaphors sometimes of battles, armies fighting, because I think it's incredibly relevant sometimes. And I talk about the difference between why prices rally. There's two different reasons prices rally. Let me ask you guys that question for fun. We're not in any hurry here. What's why are the two reasons prices move higher? Let's say you could do higher or lower. But what are the two? What are the two reasons prices move higher? Let me ask you the one reason. Why do prices move up? Why do prices move up? Now I got to ask you this too. What are the two different ways prices move up? From a technical basis, prices move up. I'm looking for the simple, dumb, almost funny answer, which happens to be the only correct answer there is. Why do prices move higher on the stock, on the market, whatever it is? There's two ways it happens. Okay. Peter basically said it kind of inside out, but the basic answer people give is because there's more buyers than sellers. And now, when we say that, I want you all to understand technically there's never more buyers than sellers, right? Everybody knows that, right? Because at the end of the day, there's one buyer, one seller, one buyer, one seller. But there's more potential buyers, which if you have a group that's bigger than the other group, I guess you could go out more aggressive, David, sure. There's more potential buyers than potential sellers, right? So prices could move up because there's more potential buyers and potential sellers. But what I say sometimes, and it's almost tongue-in-cheek, but it's really true, the other reason prices move up is because there's less potential sellers than there are potential buyers. Does that make sense to you, or does that just sound comical? Does that make sense at all? Because it really is the thing. And it's important in understanding that green bar there. Does that make sense to you? Prices move up because there's more potential buyers than sellers, or there's less potential sellers than buyers, right? In other words, well, potential means how many people want to buy or sell. In other words, if there's 10 people that want to buy selling something and only 3 people own that thing, let's say there's 3 Rembrandts out there and there's 10 people who have enough money to buy the Rembrandts, right? Those 10 people will keep bidding for the 3 Rembrandts, but at the end of the day, there will only be 3 people who bought the Rembrandts, right? So there are 10 potential people, right, who want to buy the Rembrandts, but only 3 will actually be buyers. Does that make sense, Sally? It's the same way in the market. There could be people clamoring, and that's the difference. There could be people clamoring to buy stocks. In other words, there could be people who want to sell, but the bulls are so aggressive, so persistent, so powerful. They're just slaughtering every bear in front of them and pounding through and absorbing all the stock that wants to be sold and moving things higher, right? That's a big volume move where you see the bulls just coming in and trouncing the bears. But there's another thing that happens too. Hey, Carmen. There's another thing that happens too, and that is sometimes the bears just don't want to, they're just not interested in selling, really. They're just not interested in selling because they just kind of back off. They just say, well, I'm not willing to sell that low. I'll sell higher. And they just keep backing away. And the bulls just keep chomping at it, and just that we don't have any active sellers. So prices move up, not because the bulls are powerful, because the bears are not trying to sell. Why are they not trying to sell? Maybe prices got too low. Prices get too low, and the bears say, okay, this is too cheap now. I want prices higher to sell. Whether I'm shorting or getting out of a position, it's too low. So they back off and say, well, let's let prices come up. Let's let the idiots buy up the prices, and then we'll start selling at a higher level. And that's when prices move higher, not because the bulls are in control, because the bears are just, for lack of a better term, playing with them. Does that make sense? Does that make sense? And I know some of this, if you're hearing this the first time, may seem a little confusing, but it's also the reason that if you struggle with technical analysis, it's also the reason it may not be working properly for you. Okay, so what we want to see then at this point is we want to see the first time the bears step up to the plate and say, all right, let's sell. Boom. We want to see the first time the bears say, all right, we're back in control. Let's take control. And that happened twice here. See that gap down? That's a gap down that day. It's a big gap down. And what happened in result, after the bulls ran things up 3 days in a row, the bears stepped up to the plate and said, okay, let's get selling again. And what did the bulls say? They said, no way, we're back in town. And the bears said the next day, no, you're not. And guess what the bulls said? The bulls said, yes, we are, and we're done with you. And this is the day that I went all out bullish then again, which I was waiting for since October. In all fairness here, I took 2 long positions. They made money net, but that turned out to not be the low. This is the low, and this has been the bullish move ever since then. Oh yeah, we'll talk about how many confirming things there. This line on the chart though, guys, see this is the weekly chart now. Here's the daily chart. This area right here that we just got to, This line has been here ever since I went bullish. So in other words, all the way back here, this is like the target area. This was the area that had to be dealt with, and it still is the area that has to be dealt with. Now, what does that mean has to be dealt with? Is that the high in the market? Probably not. I said back in October that we would have this fall. When we have this fall, the rally back would be difficult to ascertain where it would stop. I said I don't think we're making new highs. In other words, I think we're going to have a long sideways weekly pattern for a little bit. How much of a lower high are we going to hit? I don't know. I think we're going up here somewhere, but I cannot rule out that that would be the top. So where I am right now is just kind of sit and chill mode for a little bit. In other words, see how we react. And the problem is that if you look recently, this chart was just taken today. See all these little bars in here? See, we're just getting this very questionable reaction to what's going on. So this has to now form. We need to see the volatility form. We need to see it shake one way or the other, and then continue either higher or lower. I think we are going higher. I'm looking for confirmation of that. Don't have it yet. Yeah. Long sideways, you mean in here? We're going sideways in here because we have a powerful buying underneath us, and we're digesting a very tough area of selling up in here. So it's a little battle that's going on. We're battling back and forth. How many confirming things are here? Well, number one, I'll just run through them because it'll take too long. Number one, huge volume on the last day and a half down. Biggest volume on the chart on the last day down. That's confirming thing number one, that's a bottom. Number two, a big green bar, not by itself, but with other things confirming that is going to be the low. Number three, guess what happened around this time as well? When we hit those lows, guess what the pundits proclaimed? Did you know what happened around Christmas time? During Christmas week? What did you hear on the news? Guess what the pundits proclaimed? They proclaimed that we're in a bear market. Why are we in a bear market? Because we dropped X percentage, and that's what a bear market's defined as. I'll cover that more in just a second. But when you hear bearish news, it often is a good sign you're at a bottom as well. I'm serious. It's generally very true. We also had, what else was a confirming thing here? Well, then, of course, the true confirmation coming on the chart when this red bar got engulfed and went over. I thought I had one other thing here that was going on. I guess that was it. And then, of course, the higher time frames. Let's just take a quick peek at what some people ask sometimes. I wanted to cover. Here's what it was I wanted to ask. This long-term outlook has never been anything but how you see it right there. For 10 years, and as long as I've been doing this letter, which is about 18 months, this has never been anything but there. Now, that's a big deal. In other words, unfortunately, there are sometimes, well, not sometimes, a very common thing that you see is that there will be people who are constantly yelling bear market. I mean, here where I am in Florida, we have radio stations, a lot of financial planners and that kind of stuff. And we have a guy that has been proclaiming, to get out of stocks for 4 years on the radio. This market is crazy. You can't afford to lose this, blah, 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 blah. And you hear this all over the place, and there are a lot of people who constantly proclaim sell, 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 bear market, bear market, bear market. And guess what? One day they become right. Right? One day they're right. And I guarantee you we're going to have a terrible market crash. You don't have to be a genius to determine that. But being 7 years off in your prediction is not very helpful to anybody, and that's what's key here. For those of you that don't know me, I am by nature a very bearish person. Okay? All this is garbage. All this is just, I refer to investing or trading as simply playing a video game, because that's all it is. None of this is real. The prices that companies sell for or they're valued at by their valuations are insane, even at the cheapest of all evaluations. It's all just a game to some extent. So we will have people all the time proclaiming there's a bear market or that we're going to have a crash. And then when it comes, guess what? They stand up and start applauding themselves and say, yeah, we had that crash. But you got to say to them, well, wait a minute, you've been calling it a crash for 4 years. That didn't help me much. The market quadrupled in 4 years. Now it pulled back 20% and you're taking credit for that. So to me, and what I'm saying, it's a big deal. And it's not easy, always to have the courage to stand up and say, you know what, this is what we are. And I've never ever changed this in 10 years, never. So the long-term outlook. Now, some people want to say, "Oh man, Paul, we just fell pretty hard." Well, that's this outlook still, because here's the chart I'm talking about, and that's why I wanted to finally get to this. This is the chart I'm talking about. Does this look like a bearish chart to you? You can only see back to 2012 on this, and the rally actually started 3 years before this. This is not a bearish chart. And what we're trying to avoid the long-term outlook is, if you have long-term stuff and you have to take the drastic step of saying, okay, we're market crash coming, do we sell? And the answer to that question is no. This is what the long-term outlook is. This is the monthly chart of the QQQ, and the SPY is very similar. And already, regardless of what else has been said, already it's a good call to be hanging on. Now, that call could change. I'm not, permanently would keep that there, but we're not yet in a position where I think this long-term picture has changed yet. I think we're sideways. We have to evaluate how we go sideways. I can't tell you where we'll be in a year, but every 2-3 weeks at a time, I can tell you where we will be in a year. So this is a big deal to say that this has still been, the big picture of the market has still been bullish, bullish, bullish. I copied this out of, I put this in the weekly market summary back on February 3rd. I thought I'd put it in there because I thought it was funny, because I talked about the fact that week that everybody proclaimed a bear market, and it literally was right on the low. I said, I guess it does not matter that the S&P was up 359.49% before the pullback. That's a real number. Now, I went in and figured that. I didn't copy it from here, so maybe I figured it wrong. But going back to the low of 2008 until the high that we were up 359%. But now you pull back 20% and, we're in a bear market. Well, you can see what happens. You have to look at charts and look at price action. And when we become in a bear market is when we, on the big picture, have more sellers than buyers, and we start a downtrend in a bigger time frame, which is not what has happened yet. So there was a lot of profit to be unwound, and that was unwound, and now we're kind of back to a normal charts again. So what happens from here, we'll evaluate as we go. Okay? Sure, Leonard, no problem. There should be a recording of this if you want to get the rest of it. So weekly support is more important than other factors, location. Not sure what you mean, Tony. Weekly support is important on the time frames it's relevant. I mean, any support is relevant on any time frame. If you're talking about the big picture of the market, you're talking about weekly and monthly charts, so naturally weekly support areas are very important, sure. All right, so let's see where we are here. And unfortunately, the bulk of the talk I did here is what I just did, because for that whole midterm picture, the concept is what I just talked about. The fact that take a look at the daily chart. If you look right here at the daily chart, you will see what I mean. We just, from here, from the bullish call, we just, oops, that's not doing it right. Hang on, let me get that centered on your screen for you. Boom, looking right in here, right in that area. Boom, this is just day after day after day. Boom, 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 boom. Just grinding our way right up to this area that we're at right now. So it's been a very kind of, from that bottom, it's very a fairly uneventful type thing. We have just kind of, ground our way higher ever since the day after Christmas. But really, in here is when the grind started. And even on an intraday basis, the last few days have actually been a little tough intraday because they've been so narrow. Take a look as we keep going here. You can see. Look at the daily chart through here, just, very narrow days, a lot of hourly chart days where you get a quick move in the morning, and that's about it. So let me run back down to where we were and add a couple other comments here. Yeah, on the last day down, huge volume, wide range bar coming out of the first pop. Right, Tony, exactly. The fact that it was testing the weekly support area that would really start to say we're breaking down if we didn't hold it, that was the lateral support area, right? Yeah, that's not in, that'll be in the next bookmark on the market video, so I'll put some of that stuff in the next one. But yeah, that was not covered by the last one. The last one was covering the short call for November, October, November, December. On the intraday comments real quick, because I just marked a couple things here because the last couple days were pretty boring. What this means is prior day's call right here was trading above 3, and from the prior day 3 was a line right across there. So trading above 3 is bullish on a confirmed basis whenever it happens. And the comment was, okay, excellent. No, there's a home run play. Going long from this prior day's call for that move there today. So that's what the yesterday's accuracy is about. Something else I want to point out is the language that I use is pretty clear and unequivocal. Now naturally there's times where you have to say we have to wait and see this, wait and see that. But for example, back on January 4th, January 5th, here it is, here's the one I wanted. Keep in mind there will be volatile days. The issue is that when the smoke clears, we should continue moving higher, not lower, as we have seen since the beginning of October. That's back on January 8th. So just besides the outlooks, besides the commentary, just a note up on top saying, hey, we've been falling, yes, but we're going to reverse and start going higher now, which of course we did. If you keep a look at this midterm outlook, let me go back to when it changed. So midterm outlook, even before it was confirmed, went to neutral because I felt we were going to turn. And then once we went to green, this midterm outlook has never gone red again since January 7th. So it has been, the intraday will change all the time. Long term is pinned green. But this one, if you notice this day after day, here's the next day, the next day, the next day, the next day, the next day. It's green, 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 green. It goes to yellow a couple days when we hit key areas to see if we're going to react to it. We never reacted. Green, green, stays green the whole way up. Okay. Let me talk about one other thing on here. On these charts down here, I use different lines. I don't just have red and green lines. And there's three different things. The line could be solid, it could be dotted, or it could be a wide strip of faded color, like here. Okay. A solid line means it is what you would think of as a typical resistance area. In other words, when you see a solid line, it means that I would play this as resistance. In other words, the call for this day was probably to short. The market is a short, okay? Because that is resistance. So solid lines just mean red is resistance, green is support. A wide area is what you see a lot because it means it's a big, thick area, a support area. Support is not measured to the penny. On a pattern like this, there are three different evaluations of how you would find a support area. And they have to be kind of averaged. And it's based on three different location items, of which, depending on the chart pattern, could not all synchronize in the same spot. When they all come in the same spot, it's very accurate. When they don't, you get this wider area where they'll pull back to here. Even a little above this technically could have been it. Pull back to here, it could be bullish, or it could pull back to here and still be bullish. So it's a wide area of support. And an important one, and again, these are all in those rules that are in the letter, but in case you don't read, aren't aware, let me find an intraday dotted line. Again, that solid red lines means it's really resistance. Like here. This dotted line means that it is a resistance area, but what? Anybody know? If it's a red dotted line, it's a resistance area, but what? Would you short into that resistance area? What's the other purpose of seeing a resistance area on a chart? If you had a resistance area, if it matches with all time frames across the table, you could use that as a shorting opportunity, but what's the other reason you have resistance areas? It could be a target for a long play, that's true, but there's another reason too. What if this time frame has a resistance area, but the bigger time frames say you're going higher? Well, right, Carmen. Breaking the resistance could be your trigger, your confirmation to go higher. So sometimes the red is not there when it's a dotted line, well, all the time when it's a red dotted line. It does not mean you short into that. It means that the expectation is to get above that the next day. See, like here? Here's this day, whatever it is. They'll say it's Tuesday. Here's that dotted line up there saying over that is going to be bullish. The expectation is to play bullishly over the dotted line. So you wouldn't necessarily short into the dotted line. You'd wait to break it and then be bullish. And here's the next day. The dotted line was down here. We were gapping over it. Does that make sense, everybody? Well, actually, in this case, I am saying this is an intraday chart. ER. This is an intraday chart. So in this case, I did say buy the new high. We were gapping to that new high. But what that line means, regardless, let's say I agree with you that, oh, I wouldn't go long there. It still means, though, that it's bullish over this line. In other words, it's not appropriate to be shorting into that line because of the setup there. And I mean, you see that in different spots. You see, you can find another one here. See here's another one, right? So with this setup the way this is, I would not, the call is not going to be, well, it could be that you could short if you got underneath here. But once you're up in this area, I would wait and go long over the top. So in other words, that dotted line becomes the threshold to go long, not the shorting opportunity. Now this chart presents different possibilities. If you're down here, this presents kind of a mattress you'd short into. But if you're up here or in the middle of the base, I would wait and go long over the top. Okay. So again, when you hear all the words that I'm saying and understand the different concepts of support and resistance, you can see why somebody who is just picking up a quick manual on what technical analysis is could never come close to understanding what to do, because if your definition of support or resistance is one line, one sentence, one thing, it doesn't possibly fit all the stuff that happens on a chart, because you have to have different time frames coordinating to have real support or resistance areas. A resistance area on a small time frame that's going counter to the big time frame, the break of that resistance area is probably your buy signal on the bigger time frame. So again, it's coordinating all this stuff that's really important. So I thought I'd give you some examples of this stuff on the market. This stuff goes in a letter. It gives you some clues into what I've been saying and thinking about the market if you don't normally listen to me, as well as going forward. We're at a weird time here right now where this is very much a wait and see for the next few days. So let me ask you guys if you have any questions while I check my notes and see if I left anything off here. No, you listen good, R, but please understand I'm giving you, I think, a fairly large dose of information, and without having been properly subjected to it, like when I teach in a seminar, we work our way through all this stuff. I think it's a lot clearer to understand. I'm just kind of, feeding you with a fire hose real quick to get some points across, and I don't really expect necessarily that you would understand everything I'm saying. It's not that it's that hard. I'm not trying to say, geez, this is hard, only I can understand it. Not at all. Anyone can understand it, but I'm doing a 90-minute presentation about the market, and I'm trying to get across some key points and why things happen and don't happen sometimes. So I'm sure you're listening fine. It's just a lot of stuff to absorb. On October 2nd, one's down. Oh, why will we not make a new high again? Well, not ever again, but not on the next rally. In other words, I'm not expecting a new high in the next rally. Let me go to the weekly chart. Let me go to the monthly chart, weekly chart. Because a whole bunch of things, Tony, and again, the talk I'm going to have is not the typical thing I think most people have to understand immediately, but it's just the basic stuff, Tony, that you've heard before many times. It's just on the monthly chart here. When you start talking about separating here and the distance we are above from here, back here when it happened, it was a big deal, and that's minor. And you see what happened last time? This is 3 years ago. This is the last time that the weekly chart broke trend. You see what happened back here? Again, we did not go immediately to new highs. We fell to here. We failed to make a new high. We fell to here. We failed to make a new high. We based out. It was a year and a half later before we made a new high. You see that? I think it's the same exact situation, except even more extreme. So extreme that I'm keeping the door open to the fact that this does make a lower high that becomes a big deal, but I'm not there yet. I've never yet uttered the words that the big picture is in jeopardy. This is the first time I've said in 10 years I'm even considering it. But that's what's going on here, T, is that we got up to here with this separation and that extension, and that pullback is not going to happen nicely. It's going to bring in profit-taking some. When you have this much profit built in, plus this really was a power trend that led into this, so it means you have a lot of profit-taking to be had from people who've not taken profits, and when you get that first whack, all these people want to come back and take profit. So every time you rally, you get more profit-taking. Of course, at any point, that could turn into bearish selling. It turned out to be extensive profit-taking, but that's the main reason why. It was right off of that chart there. I don't think I have to go anywhere else even to explain. Was there anything on the weekly chart? Here's the weekly chart. Okay. Any questions? Anybody? For somebody just chatted me. If you want to, I don't come on to sell this stuff. If you want it, I figure you can figure it out. But there's the services page, and that's the only page you don't want to go on a website, because the stuff on that page you have to pay for. Everything else on the website is free. But that's where you can find information about the trading room. If you're a day trader, there's no better place you can be, or about this market letter, or about the long-term trader letter. Yeah, I didn't even mention that. There's so much stuff I could talk about. The long-term trader went long here, coming off, of course, of this January low with 4 different plays. Any other questions, anybody? Oh, yeah, that's right. There's a big thing going on. Next week, for those of you that have not attended it, I do a half-day seminar that I invite everybody to. It's the first part of the actual seminar program. It's called Introduction to Mastering Technical Analysis. It's going to be on a Monday, because this round of seminars is going to be on a Friday. This has been posted since January, but it's going to be on a Friday. So March 1st starts the 1st. So if any of you were kind of waiting because you prefer to take seminars on a weekday instead of a Saturday, they're going to be for those 3 Fridays, March 1st, 8th, and 15th. And then also a week from today, I'll be doing another DTS special event that is yet to be titled. Okay? Somebody also asked me about the last one. The last one I did, If I Bring My Umbrella, It Will Rain. It was recorded. It will be posted. I normally get those out there. Somebody hasn't posted out there within a couple days. That one's not been posted yet, and the only reason was because in that seminar, I introduced the package I'm doing with a company for those of you that want to be involved in prop if you need money for day trading. And before I posted that, there were a couple of little fine-tuning things I wanted to work out before I put that out there. So that video will be coming. And for those of you who are interested in if you need money, capital for day trading, you can email me if you want. I'll give you more details on that. Okay. And you can also feel free to email me, as I've offered you guys, even if you're not subscribers or whatever. You can email me any trades you want me to take a look at. I'll gladly take a look at them for you. And of course, my seminar students, we always hold that as part of the program. We'll have extended discussions about what they're doing. But if you want quick comments on some trades, I'll be glad to send them to you too as well. All right, guys. Have a good one. We'll see you next time I talk to you, which will be, I guess, a week from today, right?